So today in the show, I'm going to tell you how you go from selling popcorn door to door to overseeing a portfolio of multifamily assets worth approximately $170 million. I'm very, very happy to have with me today Mr. Anthony Walker of Cornerstone. Anthony, welcome to the show.
Pleasure. Thanks for having me. Excited to jump in.
So, I mean, gosh, going from popcorn salesman at the age of 10 to multifamily mogul at the age of 26 is quite a journey. So let's dig into that and figure out how you did it. But I guess before we get there, just can you briefly describe your company as it stands right now? What's the snapshot of Cornerstone at this moment?
Yeah, great question. So we are a multifamily, private equity firm. We, focus on syndication. That's where most of our funds have come from so far. And then we're, jumping into the realm of family office, private equity. But, in quick terms, we develop ground up construction anywhere from 50 units up to, we've got 146 unit up to a 300 we're penciling right now. And then also acquisition, we're kind of focused on value add, financially distressed, mismanaged assets. And we're primarily focused in the Northwest and Intermountain West regions.
And so how much of your portfolio is new development and how much of it is acquisition, would you say?
Yeah, great question. When we kind of first launched, a lot of it was acquisition. The market was different, and then COVID changed things a lot. We had started a development around that time, but given a lot of the money coming out of California, coming out of Portland, Seattle into our markets, drove cap rates down to a range that we weren't willing to play in. We knew that they would go back up, and we didn't want to lose our investors' equity. So to date, we've probably developed 60% of our portfolio and acquired 40%, but that's going to change. We've already got a large acquisition under contract in the Montana market. So I think going forward, it'll be close to 50-50.
And when you say we, who is we? What does your team look like?
Yeah, so I've got two business partners. I'm a firm believer in business partners, especially if you're young. Obviously, you can't sign on Fannie Mae loans. You probably don't have the background to do that. I certainly didn't grow up with money, so I didn't have, a few $1 million sitting in reserves. So I'm a firm believer in partnerships. 50% of something is better than 100% of nothing. So I've got two partners, John and John. We run the firm. I'm a co-owner and I'm the chief investment officer. Business partner. He's been in the industry quite a bit longer. He's our CEO, and then I've got other business partners, COO, and then under us we have Sarah, and then other than that, actually it's a team of four. We keep it small. We're kind of the Twitter model of things. We know exactly what to do, how to do it, and we third party the rest. But as we grow, we're looking at hiring a significant amount of people this year, and then kind of insourcing, property management and those other different kind of trades as we scale out our company.
And what's your precise role? Like what are you responsible for?
Yeah, so I wear a lot of hats. I'm young, and one of the best things about being young is I'm hungry, and I don't have children yet, so I get to work extra hours. So my role entails I'm head of acquisition, so I look at every deal that comes through the door. I underwrite the deal with our team, and then I'm in charge of raising all the capital for our team. That's kind of my two hats that I play in every single day.
So who do you raise capital from and how did you get there? Because I mean, you told me before we started the recording, you've raised about $53 million, which is really tremendous. You're 26, right? You
Yep.
obviously don't have gray hair and a long track record on this, right? So how did you manage to raise so much capital so quickly? What's your, I guess, for lack of a better word, what's your secret? What's your
Yeah.
methodology maybe is a better word for it.
Yeah, great question. When you start, obviously you're not going to attract capital from your family offices or your institutions unless you have a track record or unless you have a great relationship. And I didn't. I grew up very lower middle class. Mom's a special ed teacher. Dad, does a sales career, and I'm youngest of five, right? So I didn't have a lot of connections that could write me a $100,000 check, let alone a million or $2 million check. So that kind of goes back into partnership. So one of my business partners, he's in his 50s, and he had never syndicated before, but obviously throughout 30 years, he had, contacts. So when we first started, we leveraged everything we possibly had. I had some contacts. I sold real estate previously, had a real estate team, had some contacts from there. And so we put everything we could together, right? I mean, our first raise, $1.5 million. I think we probably had, 20 plus investors at 50K checks. And then from that, we impressed them. They referred more people. They referred more people. So our first $48 million was all through referrals. We didn't pay for anything. And it was simply hustle, right? It was impressing, making every single investor a raving fan that we could get through the door. It was finding people that wanted to invest into their local communities, right? So if we wanted to do a deal in Coeur d'Alene, Idaho, what's better than finding people in Coeur d'Alene, Idaho that understand that market, understand the demand, the jobs coming there, the population growth, affordable housing there, all these different things. So that's kind of what we focused on, and we continue to focus on. We have a lot of investors in our own communities. And so, that's kind of how we did it. And then I still to this day get multiple coffees a week with investors. I'll cold call someone who has a $5 million house in the lake, and I'll get a hold of them and I'll say, let's grab coffee. I never pitch them. I never say, hey, invest with me. I said, just want to meet you. Right. And then you do that and you stay up with them for a year, they might invest with you. Right. So I've done that at scale over years and years and years. And a lot of those people watch you, they see what you do, they eventually invest with you. So it's a long-term play, but it's also like getting out there and talking to as many people as you can.
Yeah, I mean, I was going to ask you how you find these investors, because I think that's always a real challenge for people who are getting started is literally, well, where do you look? Where are these people? So what have you done? You mentioned cold calling, but what kind of are your go-to methods for finding, new potential investors?
Yeah, great question. I mean, today we have kind of multifactorial, we have a lot of different realms. When I first started, like I said, we didn't have a lot of money to put toward advertising or like that. So we focused primarily on cold outreach, right? So I would sit down with people, find people with nice houses. I would go out into the community. I'd go to events where I knew other entrepreneurs were going to. I'd go to events where I knew that I could run into a doctor, a surgeon, a dentist, right? These realms where people make money, right? People make money in healthcare, people make money in business ownership. And if you can find the people that are too busy to invest themselves and you can provide a solution for their problem, that's kind of where we first found that. And then, we met someone who was very well connected in Montana. He used to be an athletics director, loved what we were doing, invested with us, referred us a bunch of people because he was impressed with us, right? When someone finds someone that's providing a good service, they like to tell their friends about it. And you want to be that good service, you want to be that good investment vehicle. And then now as we've progressed more, obviously I'm big on, LinkedIn. I try to post twice a day on LinkedIn. I'm trying to grow that. I actually haven't raised a significant amount of capital in there because I'm not trying to. I'm trying to provide as much value as possible, kind of that Gary Vaynerchuk jab, 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 right hook. I haven't thrown many right hooks in there yet, but my idea is to provide so much value that when I ask, I get it back. And that's what I've done with a lot of investors, just on the personal level too. I mean, I get, regular coffee with people that are worth hundreds of millions of dollars, and I've never asked them to invest with me, but some of them do invest because they see what I do and they believe in me and they eventually invest with me. And then the third thing that we do is now we've hired a company and we do some paid social media. So we run ads on Facebook and Instagram, very targeted ads for accredited investors, build up that database. And that's more of a numbers game. Think of coaching where you have a closer and a setter. We probably close 3 to 5% a year of those. And then more close throughout time, because sometimes a conversion can take 6 to 18 months to convert them. But that's what we're doing as we speak to kind of get more investors in the door and to grow our portfolio.
So a lot of this has just been real old fashioned, kind of grinded out, meeting people one at a time, and just, the accumulated accretion of investors over time is how you built your business.
Yeah, as I mentioned, didn't have a lot of money, didn't have a lot of expertise, had some advertising expertise, but I'm still a firm believer in person. Everyone's talking. I'm good friends with Brandon Turner. He's raised like $400 million through social media, but he had 15 years of branding. I'm 26 and I've had basically a couple of years of building my LinkedIn, if that even, right? I don't have this brand, I don't have any of that. So but I did know it worked, and in person works. In person still works better than anything, in my opinion, because they get to see who you are. If they're going to trust you with 100,000 or $1 million, it's still part of their net worth, and they want to see who they're investing with. So we throw investor events. Last year we rented out a big area in a baseball game, and we had 70 or 80 investors come to that, and that converted investors, right? Because they got to see A, who they're investing with, but B, they got to see other investors that are invested with us that are happy with what they've done, right? That builds a lot of credibility. And in real estate, we were talking about this before we jumped on. There's 1,000 syndicators out there, right? You can go invest in, you can go drop $1 in Texas and you'll find 100 syndicators that are doing some deal down there, right? And your competitive advantage is you and you as a GP. That's the biggest competitive advantage. What your operating skills are, what your background is, who you are as a person, your integrity, your trust. That is what a lot of investors are invested in, because if not, they can choose anyone to invest with.
It's funny. I've spent years building my own kind of investor list and personal brand. First on Facebook, more lately, more on LinkedIn. I do podcasting, YouTube. I do a lot of things. I'm kind of out there a lot. A lot of people know who I am. But I've recently come to the conclusion that I kind of need to go back to basics and start really kind of doing the one-on-one with investors again, because it really matters. And especially today, I think in this environment where the market has had some hiccups for sure, I think it's really important to investors to be able to kind of see you, look you in the eye, shake your hand, chat with you. I think the personal attention really helps a lot. And it's really going back to the personal relationships in a way that I don't think it has been for the last few years. So I think it's
Yeah.
incredibly important. It's always been important, but I think it's even more important now than it has been for quite some time.
And I think that's where a lot of my successes come from, is when everyone, COVID changed a lot of things, when everyone was so focused on building a brand, which I think is important and I want to do. But I knew that, building a brand is a 10 or 15-year game. If I want to make short-term gains, I needed to be in person. So while everyone else was focusing on building the brand, being the next, Robert Kiyosaki, I was focused on doing that, but also that in-person stuff. And then whenever I'd make an in-person connection, I'd always follow them on LinkedIn. And that's also a magic pill, because not only are they connected with you, they know who you are in person, then they get to see all your posts, see who you are as a person. They build that trust. I mean, just this morning I ran into one of our investors and they were like, "Man, I loved your LinkedIn post the other day." And it's like, I haven't talked to this guy in probably 6 months because we've been so busy, but he's watching my LinkedIn post, right? And that's what's incredible about, social media and branding, is it's not just about bringing in new leads, bringing in new capital. It's about building the trust with your existing portfolio. Then they can refer you. I mean, I just got a referral from someone else from LinkedIn because they have invested with us. They watched our post, they referred their friend to invest, sent them a post on LinkedIn that I posted, and now they're thinking about investing with us, right? Because and that's the other beauty of building a brand, but doing it in person if you can mesh the two.
What do you how do you do follow up with people? That it's one thing to go and find new people, but then the follow up to keep that relationship warm. What's your preferred methodology for that?
Yeah, that's a good question, and something that I, wish I had more time with. So I've tried to optimize it the best that I can. So number one, I'll definitely go back to LinkedIn and social media. A big reason I post on there is to keep top of mind awareness with existing followers, existing investors, and people that are watching what we're doing and who we're becoming. So we always push people from that are coming in through paid social and whatnot to follow us. Number two, we use HubSpot as our CRM. We track a lot of stuff through there. We send out, automated emails through there. We send out quarterly updates and whatnot. And then some of the investors, I kind of have my own personal list of investors that I'd love to invest. I think that meet our investment criteria well. They're high worth individuals. I'll follow up with them periodically. I'm never trying to bug anyone. I'm not a aggressive sales. I'm not like, "Hey, you need to invest in this. This is the only opportunity you're ever going to see," because honestly, like, all of our opportunities are amazing. All of our developments are amazing. All of our acquisitions are top notch. And so if that's not the right opportunity, the next one might be, but I'm never going to cram it down their throats. So most of my follow-up is just like, "Hey, how you doing? How's your family doing? How's your business going? Are you growing? How's everything in life?" And then I have a quick conversation, and then that's it. And then other than that, they get to see a lot of our content on social media.
Is this on the phone, in person, combination of both? What's
Yeah.
your
I would say all of the above. I get coffee with investors, especially ones that I, A, want to learn from, and B, want to, maybe convert someday. I do get a lot of coffees with people, as I mentioned. I do call a lot of people. I kind of have again, my list that I'll make a call, but that's not as frequent. And then the social media is just, daily posts to keep top of mind awareness. I think that's the true key to sales and to conversion is top of mind awareness. When they're ready to invest, when they're ready to make that step, if they haven't invested in real estate, they're going to choose the first person that they know, like, and trust, and you want to be that person.
And how much of your day do you think you devote to this kind of, I guess, call it marketing activity, as opposed to the other things that you do to keep your business going?
Yeah, great question. So I've now diverted my calendar into I'll do one day where I focus on one big task, right? Maybe it's creating content that entire day. Like Monday, I spent 6 hours creating all the content for the next 10 days. And then Tuesdays and Thursdays, I'll meet with people. So I probably spend 6 to 8 hours a week getting coffee with people or meeting with people that are existing new investors, follow-up investors, and then following up with people via call. I mean, that's probably 1 to 2 hours a week for existing, and then new investors that come in that are interested. I probably spend another probably 6 to 8 hours there as well.
So shifting gears a little bit, I mean, one of the things I'm really, I like about hearing your story is that you're in Coeur d'Alene, Idaho, and that's where you're investing. And
Yeah.
I would say 75% of the people that I interview on this show, at least, are investing in Texas or Arizona or Florida or maybe the Carolinas, but heavily, heavily Texas. And to my mind, sort of like, well, everybody's doing the same thing. That strikes me as a little bit scary, right? So
Yeah.
you have not gone down that path. Don't seem like you're tempted to. I would love to know why Coeur d'Alene, what do you like about that market? Why do you invest there? All of the above.
Yeah, I'm a firm believer in doing hard things, right? Texas is the reason everyone buys in Texas, Arizona, and Florida. There's an abundant amount of opportunity and opportunities to buy down there. So it's easier to find something, right? In our markets, it's very difficult to find a deal because a lot of people buy here, they don't sell, and then development here is there's not as big a workforce, but that can lead to better returns and a better investment opportunity. And so part of our investment thesis is we want to invest into communities where high liquidity hasn't entered at full scale yet. And what I mean there is if you go buy a deal in Scottsdale, Arizona, you're going to be competing against a group from Microsoft. You're going to be, competing against Carlyle, Blackstone, these hedge funds that have compressed cap rates, right? But their eyes are now on our markets, but they haven't entered at scale yet. So we can still buy and develop at better pricing. But as soon as that money, what you call liquidity, enters our market, it's going to significantly increase asset pricing. So we want to enter into these markets before significant liquidity enters them. So then we can exit when that liquidity is at a peak and make a significant return for our investors.
And what else though about those markets do you like? I mean, not simply that they're, I guess, are early stage in a sense, but sort of on the fundamentals because you still have to invest into a market that makes sense right now, whatever the future, possibilities are. What is it that you like about those markets right now, independently of that liquidity question?
Yeah, absolutely. I mean, I think that any decent investment you're going to make should have obviously high population growth and job growth. So all the markets we are investing in have both of those kind of as a bare minimum parameter. And then they're what you call maybe Zoom communities or whatnot, but remote work isn't going anywhere. The kind of the creator economy is not going anywhere. So I think a lot of people are going to strive for better quality of life. So every single market that we invest into, Coeur d'Alene, Missoula, Montana, Bozeman, Kalispell, Bend, like those all probably sound familiar because they're gorgeous. People talk about them. Yellowstone, the show, made Bozeman incredibly popular because the quality of life is off the charts in all these locations. And that's where we want to invest because no matter what, and as things change, as the world becomes more transparent, people are going to strive for this better quality of life outside of their 300 square foot studio in New York for $5,000 a month. They're going to strive for that better quality of life to raise their family in better areas. And so that's why we think it's also a good investment ground because it's going to continue to draw people no matter what.
And so, you know, you don't have a lot of deals to choose from in those markets, like you mentioned. So
Yep.
how do you grow your business?
Yeah, we grow our business by choosing more of them, right? So we're all over Montana, we're all over Idaho, Central Oregon. We're growing into markets into Utah, growing into markets in Colorado and Wyoming. So we're kind of growing out of Coeur d'Alene, and then we'll bring management and bring our philosophy to these areas. But we also have to have kind of world-class remote management, because we're not just going to have a 10,000 unit portfolio in Dallas, Texas, right? We're going to have a 10,000 unit portfolio spread across 5 or 6 states, but that's what we're preparing for, and that's what we're building to do to kind of capture that opportunity and scale our business.
Yeah, I mean, how do you deal with the labor issue? Right? Because I know from some smaller markets, I mean, even sometimes smaller than the ones you're talking about, can be very, very difficult to find not just qualified people, find anybody sometimes. So how have you managed to address the labor issue?
Yeah, great question. And that's probably our biggest challenge as a company, and growing in these small communities, especially a business. So we addressed it in kind of in two forms, right? Number one, and the most common, right? We are very open to remote work. We'll hire people in different states, and we have the systems and processes, software, Slack, whatever you want to use to manage employees remote. And then that's where it goes back into branding, right? We are creating a world-class organization that people want to work for, right? So in Coeur d'Alene, I can name a dozen people that work for different companies, like maybe it's a Blackstone or they work for a Carlyle group, but they live here and they work remotely, right? But would they love to work for a smaller company that pays similar but has this incredible local work culture? They absolutely would, and we've proven that time and time again. So I think that's up to the founders of the company to create that work culture and to draw people into it. And that goes for having a good community presence, but number two, having that social presence, right? So a mentor of mine, Brandon Turner, lives in Maui, where it's a similar idea. A lot of his workforce is remote, a lot of it is local there, but he gets some of the best people in the world to work for him because he has such an incredible brand, and the human being that he is just draws the best people. People want to work for him, and that's what we're creating here at Cornerstone. We're creating a work culture that people want to work for and believe in the vision that we're building.
So what does that mean in practice?
Yeah, it means quality of life. So it means that they can come and work here, they can have vacation time off, they can believe in the founders, they can get vested interest in our deals. They believe in what we're investing in, they want to retire off of this company, and they're not just trying to climb a corporate ladder. They're coming into, you kind of combined traditional real estate, that investment banker mindset with like tech industry. You kind of mash the two, and then you also have a brand on top of that people can be bought behind. And the idea is, and goes into our investment thesis as well, is we create communities that have a sense of pride behind them, meaning that people actually want to live at these communities. So if population growth does slow like that, it doesn't matter, because we're drawing so much of the local population that already lives there and wants to live at this community that we have built or we've bought. And that drives up our returns, keeps our retention, keeps the community better. We're doing the same thing in our business, right? Where we have such an incredible sense of pride in where you work that you wouldn't even question going somewhere else, unless you are not paid somewhere, you have to move, your significant other moves or whatever. But that's kind of our goal with our company, is to create a sense of pride in where you live, so they can say, I work for Anthony Walker, and people around our community know who I am, they know my integrity, they know that I'm a trustworthy person, and they are like, wow, that's incredible, how do I work there as well? That sounds phenomenal, right? Same idea goes into our communities. I live at the Tribute in Sandpoint. Wow, how do I get into the wait list, or how do I get further up in that wait list? That's kind of what we're trying to create over our entire investment portfolio.
And so what are the kinds of things that you do at your communities to make them attractive?
Yeah, great question. So, we've got a deal under contract right now, and this is a perfect one, because they've created that community and we're going to just make it better. But the idea is to have amenities around it. So we're big proponents of infill location instead of that sprawling on the outskirts of town where they're just building the new single family community, and you've got that property. It's a good investment, but there's nothing really that draws them amenity wise. So we like that infill, good amenities. And then we like to have, a management that is management that cares about their tenants, isn't just about heads and beds and collecting a paycheck, but is actually caring, have a resident manager that they walk in, they know on a first name basis, creating a culture there where they can play board games in the lobby and they actually use the amenity space, have gym space that you have classes at, yoga classes and whatever, that people actually use. So I think a lot of it goes into amenities that are actually used as a big philosophy of ours. A lot of communities, they have this, rankety dank gym that's never used. They just put there to get by the city code. We're actually creating amenities that are used. And then having events there, having co-working space there. A lot of our new developments have, small offices, Zoom rooms, co-working space where people can collaborate and meet their neighbors. And then events where people can actually meet each other. A lot of apartments, and I've lived at apartments where I didn't even know my neighbor that lived next to me. And we're, as community owners, are trying to like bring people together and allow people to be neighborhoodly. And so they don't want to leave, because if you leave, then you have to say bye to your six best friends that live next door to you.
So let's back up a little bit. I mean, I teased how you go from popcorn salesman t- to multifamily investor. So tell me a bit about your backstory. So you did start out, youngest of five kids, selling
Yeah.
popcorn. Tell me that story about the popcorn sales.
Yeah, I was 10 years old, and I, done popcorn, right? I started in Boy Scouts when I was younger, and I've always had this entrepreneurial niche. I was always that, younger sibling that wanted to do better than my older siblings. And I found money was the easiest way to do that. I wasn't incredibly athletic like that, but I was always a little bit savvy. And so I found popcorn, and then I, was at the age where I could, be old enough to go door knock. My parents were okay with it, right? They drive around with me. They would support me in it. So yeah, I just, 10 years, 11, 12 years old, I was out in communities door knocking, trying to sell overpriced popcorn. And I did well. I probably sold almost $10,000 in popcorn. And we got about 35% of what we made into what we call a scout account, which we could use for anything. So I'd be the kid at summer camp spending $100 on gummy worms and thought I was cool, but I had it all in my scout account money, right? And so that was my kind of first taste of sales and rejection and making money, honestly. Because again, I didn't grow up, I wasn't paid for chores. I was paid for creating my own wealth, and I always have been. Then from there, that snowballed into my first job at 15. I was fired from because they wanted me to come in on a Saturday, and I said no. I actually had a trip already planned that weekend, and they wanted me to come in. They said we won't schedule you, and I said great, then I won't do it. So got fired from my first job. Quickly got a second job, and that's when I bought my first car for $250 and put about $500, $600 back into it, put an engine in it, learned how to do that. My dad helped me, and then watched a lot of YouTube, right? My dad wasn't a mechanic by any means, but he had some kind of younger years experience working on cars. And so together, we put an engine in it. And then about 3, 4 months later, a tree fell on it. Just a big storm we had. I got home from work. 5 minutes later, a tree fell on it. And but I got a $3,000 check from insurance. And that got my mind thinking about, man, I could flip cars. And so flip cars from about 15, 16 years old all the way until paid for college flipping cars. So I wasn't going to go to college originally, but applied for college the last few months of high school, and got into college, did well in college, because I had really no direction, had no mentors in my life. I knew that I wanted to own a business. So I got a degree in marketing with an emphasis on entrepreneurship and a degree in finance. And then, but flip cars that entire time. I'd go on weekends, go on Craigslist, go on Facebook, find cars, and I would flip them. I was changing transmission bolts in the parking lot of my apartment in college, and then I'd put it on there. I'd drive it until I sold it, immediately go and buy another car. And it was kind of just a side gig. Graduated college, thought I read Rich Dad Poor Dad in there, and I was like, man, financial freedom. Like I'd listened to my parents argue about money a lot of my life, and that seemed like the biggest distractor of their marriage. They're still married 35 years. But that was what they argued about. And I was like, I never want to argue about money. That was my goal. That's what I wanted. That was my biggest ambition coming out of college. Like, no matter what I do, I want to get married someday, have a family, not argue about money. And so I read Rich Dad Poor Dad and became obsessed with real estate. So in college, I consumed Bigger Pockets and Gary Vaynerchuk. So it was branding and real estate, branding and real estate. And then, but I thought that, man, I wanted to be a sexy tech business owner. So I went and worked at a tech startup, and that was my first job out of college, was 36 grand a year. This was in 2019. So still underpaid, and quit that within 5 months of, working 40 hours a week and listening to podcasts while I did tedious, boring work, and quit that. And basically from that point on, I've just gone all into myself and real estate, and starting this, business with my business partners. Did sales for 2.5 years during that as well. That's kind of where my first seed capital came from. I took my popcorn philosophy and my flipping car philosophy, door knocked, sent mailers, did everything I can, formed a team, sold about $80 million in residential and small commercial real estate in about 2.5 years. Anything from I helped do a subdivision that I just kind of learned and paid someone to teach me to do so I could teach someone else how to do it. And then during that time, use that capital to hire employees in Cornerstone and scale Cornerstone with my team. And now we're here where we are today.
So on the investor side of real estate, did you start with multifamily or did you start with single family like a lot of people do?
I started with multifamily. So I kid you not, I've listened to thousands and thousands of hours on podcasts on how to flip houses, wholesale, all that stuff. Because when I quit my job, actually, my first goal was to flip houses and wholesale. And I quickly realized that's just a transaction business, and I wanted a more relational, repetitive income. And then I went down like, okay, I could keep a couple as I'm flipping them, and like, not big enough. And one phrase changed my life forever. Is something, again, Brandon Turner said. He's like, if I had changed anything, what would he do? And he said, I would go bigger, quicker. So in my mind, I'm like, well, I've got these two business partners who are doing some light stuff. I'm like, let's just do multifamily. Let's just go right into it. And so, no, I jumped right into multifamily management, and just consumed that. So that piece of advice changed my life forever.
And when was that? When was your first multifamily deal?
Yeah. So when I kind of took part ownership in Cornerstone, that was in 2019. So graduated college, started working on my first deal. Really, probably closing that. It was in 2020 that really started working on it in 2019, but closed on it and started building. It was actually a development, a small 13-unit development in 2020. And at
So,
that time, yeah, go ahead.
no, go ahead. Sorry. And
So
that's
at
on.
that time, we had really raised like nothing, and that was a $1.5 million raise. So basically, from 2020 to today is when we've raised all of our capital, kind of over like a roughly a 3.5 but 4 year period. We've raised over 50 million of our capital.
Yeah, that's really impressive, and congratulations on all
Shit.
that success. So clearly, I mean, I want to ask you this is a little bit of off the wall question, but so you come across very self-confident. You clearly like are very directed. Where does this come from?
Yeah, great question. I'm a black sheep in my family, meaning that I'm the only entrepreneur in my family. As I mentioned, none of my brothers went to entrepreneurship. They went to, I have a physical therapist, Air Force, different realms. And I'd say it's God-given gifts. But I'd also say, I grew up in an interesting family where, my dad always dreamed of entrepreneurship. He always knew it was the way to build something. He just never took the risk. So I got to watch him try side gigs and really never have success. But my dad always told me, from a young age, he's like, if you want to become wealthy, financially free, live the life of your dreams, it's not being a doctor, a lawyer, and like that. It's owning your business, because then if you do it correctly, you can own your time. And he's told me that since I was young. And so just kind of grew up with like, I'm going to start a business, right? And then the confidence, again, I think it's a God-given gift. I just believe in myself that I was built to do something incredible and leave an impact. I mean, I firmly believe I want to enter heaven out of breath. And so I'm working every day to try to do that and leave an impact.
So what kind of advice would you give to somebody who's just starting out? What would be like the number one thing that you wished you had been told when you first started that you had to learn on your own?
Yeah, it would be a focus on one thing, and stop planning, right? I think ideas go to die in the planning stage, right? I did it for a long time, and many factors of my business and whatnot. You plan for something. What CRM are you going to use, right? How are you going to cold call people? What scripts do I need? And you plan for every possible scenario, when in reality, none of those scenarios are going to become reality, and you just need to get started and start just falling forward every single day. Like you're going to fail, but I see it all the time. People, whether or not you're becoming a real estate agent or investor, you you plan so much and you use planning as a way to avoid action, when in reality it's like, go out there, find your first deal, and then figure it out in all reality, because every deal is going to be different, and the only way to learn is by doing, in my opinion. So go out, and if you're going to flip a house, go put a house under contract, right? Give yourself 30-day due diligence where you have no risk of losing money, and then go figure out how to do the deal instead of trying to plan for stuff for the next 2 years and then eventually never take action. That'd be my by far my biggest piece of advice.
I think that's great advice. So if people want to, follow up with you, become an investor, or just get to know you, what's the best way for them to get in touch?
Yeah, I would say follow me on LinkedIn. That's where I'm most active. That's where I engage the most. Instagram, I post on there as well. Always happy to email me, through my website, www.cornerstonecommercialinvestments.com. Those are the best avenues.
So I encourage you all to go and follow Anthony on LinkedIn. It's actually how we met. He posts a lot. We eventually came into each other's orbit, and that's how we got connected. So he posts really great, informative things and a lot of value. I really encourage you to follow him. It's definitely worth your time. So Anthony, it was really great getting to know you. Thanks for taking some time to be on the show, and I'd love to follow up with you in a few months' time and get a progress report.
Appreciate it. Absolutely. Would love to.